Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. How you doing, Barry?
Doing great, doing great. A little bit of time off, plus a 3-day weekend, so
Very
doing
nice.
really well.
So we are recording here on Sunday morning, the 15th of February. We're more than halfway through February, believe it or not. And the theme for today's show, sticking with the food and dinner reference, is that dinner was served. When we got the selling, we knew what we got. We knew what we were eating. And now, in talking with you, Barry, we're waiting to see, are we going to get a second course or is that it?
Exactly.
And that's the big question that we want to address this week. Also, and there's a lot of movement in many different markets. We'll talk about some of the commodities we're going to highlight, some of the commodities we're watching closely. The metals are doing their thing, and bonds are rallying. I mean, there's a lot going on. So let's dive in quickly and see if we can make sense of the price action we saw over the last week.
hmm Makes sense. Yeah. That should be easy.
If you're an insane asylum, it's easy to make sense of it, right?
Exactly. All right. Week before, we left off with, um, well, we were basically looking for continuation or a short side, along with the possibility of a lower high, some kind of a counter trend. We're looking for either we take out the low we had, or we're looking for 1, 2, 3 day counter trend, some sort of a counter trend to test. That would give us a lower high. Or the other choice we were looking at was a false break to the upside. And what ended up happening was yeah, sure, we got the counter trend. We also, at the same time, pushed right up against the resistance up at that 7,000 level, right in here, right? So here's the week I'm talking about right there. And starting, Tuesday was looking a little shaky. Wednesday, we sort of reversed. Um, and of course, Thursday we gave it all up, and then Friday went a little lower and closed, looking pretty weak. All right, so what's happening? Just, if you guys haven't caught the last few shows, I would recommend to go check them because we kind of continue the same storyline. But just to give a quick, 30-second update, what happened was, we had a cycle high come in right there, January 28th. We had another cycle that came in early part of January. It was right around the, because we had a weekend, right there. And from there, we got a drop. And the next counter trend ended up becoming, that square out we got at the high on the 28th. Which also happened to be sort of a false break, right? From there, we came down, inside bar, then 1 day counter trend, outside reversal right there. And then we started lower. We had 2 days down after following that, and a strong counter trend, 1 bar counter trend, and that's where we caught up. So today, when one of the things we want to remember, if you guys follow us on X, and if you don't, please do. The links are at the bottom. But we were talking about right Wednesday or Thursday. I wrote, this is not the time to fall asleep because we get lulled into this sort of sideways price action, and we forget how to trade what we already have in place. All right. What I mean by that is if we have a big couple of big cycles that expired, until these get taken out, we really want to be on the short side, and that's what we've been talking about. And as you guys know, the way we gauge that is using our levels, and above this or below that, because that's the easiest way to convey that. Yeah, with other than time. So we work with price and time, and price is the easy way to know. And the fuse line that I post in the morning, same thing. We have price levels that we work with. All right, so we got the initial drop coming off of that counter trend that we were looking for. We have cycle highs in place. We didn't take those out. Therefore, the short and sweet of it is we're still on the short mode. Now, Ben mentioned about, is there is there more? Is there more to go here or not? Right? That's really the question every trader would be asking here. On one hand, we're at the bottom of the range. This is the cash chart, by the way. On one hand, we're at the bottom of the range, around 67.87 is a good marker. So we're down here. The question is, are we going to still screw around here and run back up and continue to compress and keep burning time? Or is this cycle finally going to unfold into something bigger? And I think the simplest way to summarize that, and you guys, I want you guys to see some of the other charts because you can't beat having like the bigger picture. That way, for one of the things, you're gonna be more confident in taking your signals, your setups that you trade, and using this information. It's sort of a background template, right? So, having multiple views at different indices should help, and it will help, and they do help, and also different time frames. But look at the 30-minute and the 4-hour a little bit later. Basically, getting back to the cash, I think the simplest, easiest way to think about this would be, obviously, if we take out Friday's low, we're going to go lower,
The simplest way to determine that is
right?
whether we're going to take out the lows or whether we're going to go back up
Hmm.
into the range. That's yours.
Hmm. And next week being a short week, I think the easiest way to sort of carry this is to look at Friday's price action. And if Friday's lows get taken out, I think we can look at markets going lower. And if Friday's highs get taken out, then we have to pause and think there's another 1 or 2 day counter trend. And who knows, maybe we push all the way all through the week, push back up into the upper end of the consolidation. I mean, we can't ignore the consolidation because we've been in it, right? Until we break out, we have to respect that. At the same time, we had the cycles come in. We sort of got the price action that we're looking for, so that's working. So we got both things working, but we have to stick with our work. So we're looking at the short side, obviously, but using for you guys and us too, using Friday's high and low as a pivot, I think will pay off because if this is a 1, 2, 3, we have really no business taking out Friday's high. And if we do some kind of ABCD correction on the lower time frames, then you can resell it if your system's set up that way. Otherwise, we should maybe try to take out the highs and then roll over. So we'll see how all that goes. But I would say because of the cycle highs still being in place, we're going to continue to look at the short side every chance we get, every chance the system sets up that way. That's a quick summary. If you just want a quick summary, you don't want to see the rest of the chart, I would say that's the way to go. Ben, you want to add anything to that?
Approach of looking at Friday's high and low as the sort of canary in the coal mine for us as to what's happening. Because the last thing we want to do is get short if we're just going to be grinding into this range, especially if you're using, options where you're just going to get killed in time.
Yeah, exactly.
So
All right. Yeah, yeah, yep. I think that's yeah, thanks. And now we'll take a look at some of the other charts like we normally do and see what we can uncover. And if you guys have any questions on these things, post in the comments and we always try to field those within the next day, within less than 24 hours. So we'll get in there, but talk about what you guys see. So that's the cash. Let's take a look at the continuation chart for futures. And this is coming off the low in April. And you can see the 7,000 level shows up here as well. And we've been poking up there. And I remember when we were poking up here and I kept saying, these pokes really don't count. We need to really settle above that, right? We didn't. Anyway, we have the cycle highs very clearly and then we have a lower high. But the key now here, obviously we can see the 78, 68, 17. Yeah, we need to sort of get under that if you're going to have anything long term or go a little bit expecting the market to get a little weaker. And we really haven't done that. Last time we did it, it was more of a flush, ran back up. You can see why we chose Friday's price action because Friday's low goes, then 68.17 goes, and we can either go down and hit this trend line, giving us free drives into next week. By the way, this is a calendar chart. That's why you guys are seeing gaps in between. And support wise, 66.80 is the big level. Obviously, there are levels here, but if we get down into the line level, if this line is support, 66.96, 67, 66.80 would be serious support. And one thing
Your line there is 66.97. Your
this line,
expanding, yeah, the line there,
expanding line or the 50% line?
the expanding line.
Well, for the 18th thing comes in around 66.94.
Hmm.
So if you guys just connect these 2 points, you'll get that, you can kind of see it's happening. Let me go back to the cash chart just for a second. So if we break down, if we take out 68.20 and we get sort of stuck under that, we have 67.27 has been on the chart for a while. And so I don't know if it's going to necessarily hold. Obviously, we're going to push a little lower, even if it means to flush out the lows from, let's say, December lows here. So 67.27 is one to the downside. Now, the big one is 66.38. So that's a 50% for the cash level. So 66.38. And then we have 6600 over here. So I would mark those down and watch them. If we slip through here, then it's 66.38 for sure. So that's, we have a pretty good range there to trade. All right, getting back to the continuation chart. So that 50% here would be 66.80. And yeah, we talked about, and taking out Friday's low, I talked about that. Now, if we take out Friday's high, well, then we're looking, like we talked about in the cash chart, we're looking for that counter trend. How, if it's one day, obviously it's going to be very weak. 2 days still weaker, and if it's a little bit more, it's a more of a sign that we're still stuck in the range. So that's how I would interpret that. And this is the continuation chart where the cycle high came in that square that Ben called out when we tapped it here. He said, wouldn't it be funny if we come up and tap it again? Well, that's the first cycle high, second one, and then we got the lower high. Now, last week I put, I think, 2 of these zones up here, and if we can hold above in here, above that, market will be stronger than weaker. The next level of support would be in this zone. And, we hit Friday, we hit the top of that zone. Now we're actually between the zones, right? Most of the day was below the upper zone and above the lower. So again, if we take out Friday's low, we're going to go slice into the zone. And obviously, the next target, it would be to test out that low. We're going to take that, that would be the thing to take down. And that's right around 67.50. And, these 50s always have a lot of gamma built up. So watch those, because if this 67.50 goes, we could really start going, with dealer selling, adding into the pressure. So all that can happen if we take out Friday's low. If we take out Friday's high, the reason I said high is because then obviously we had to take out this zone to the upside, which is a little bit of work, right? And if we can work, the market can work that and get up above that zone, then there's no big third for the downside. We're still working out the ABCDs and continuing this sideways till we stop. So that's sort of the plan A and plan B, and how to approach this with some sanity without going crazy. And this is the front month. The highest came along, right, a little bit above 7,000. That's 50% level on the square 72. I'm coming off the low in April. So here, we're not, like I said, we're not really using the prices here because continuation has the same, it's good enough. Those levels are working. But here, I just wanted to talk about, 50% level. Obviously, that's where the highs came in. Now, to the downside, we have 67.36. So it's not 67.50, 67.36. So it would be easy. If we come down here, we would be flushing that low out and poking a bit, but by that time, we're below 67.50. So 10, 20 point range below big gamma levels doesn't, it doesn't mean a whole lot, but boy, if we're going to start dropping like we did on Thursday, this would be the area, it would really could accelerate. So watch those levels as we come into them. And if we lose that, obviously we're going to go down and test these lows that we got in November. But that's how I would look at that. To the upside, tying it all together, still using Friday's price action. If we take out Friday's high, obviously we have some counter trend price action to deal with, and we can just trade it that way. And that'll be that. All right, take a quick look at Nasdaq. Well, this 25,140 was held for a long time. Consider December price action, meaning we just came and tapped it, bounced, bounced, bounced. They've been bouncing along it ever since November. And what was really interesting last week was, using this as a template, was we tried to get up above and we failed, right? I mean, the whole thing was about holding above. So if you can see Tuesday, Wednesday price action, we couldn't really hold it, and then we rolled under. Now this 25,140 becomes really big resistance. So I mean, I would like to use the same Friday high and low for the Nasdaq, but Nasdaq is really this 25,140. We need to get above that, not Friday's high. I mean, Friday's high is fine, but 25,140 is what we have to deal with. To the downside, obviously, if that goes, then 23,700, this zone here becomes the next target. Okay. And even if we do that, look, we're still in the range that we set up between October and November. So we're still in this range. And what's happening in here is everybody changing hands. I mean, what's the deal, right? And we keep mentioning, gosh, this really looks like distribution. And that's great. We can keep that in mind and make a note. And if we end up getting really weak price action, we know there'd be a lot more to go. So that's how you'd use that, not just to say, oh, it's distribution, but what's the big deal? Big deal is, if we start breaking down, we know it's not going to be a 1 week deal. It's going to go on for months, right? Or really radical short side price action. So that's why you want to notice that. Anyway, that's why I do it. So that's that. Anything you want to add? I know you're going to cover Nasdaq. You're going to look at the weekly charts and maybe even monthly.
Yeah, we'll
So,
hit the bigger time frame Nasdaq charts.
mhm. Anything you want to add to this? Basically, I mean, we're kind of set up for an ABCD down here. So
Minimally, yep.
minimally, right?
Hmm.
That would be, of course, that would be kind of the bullish scenario, right? Because it'd be
It would,
ABCD, we get some kind of a bounce off of that. And that would be, I mean, that would be, if we get down here, that would be just about perfect because we're going to flush out the low in November and get
right?
everybody into panic. And if we really get down here, that means the support levels didn't hold where everybody probably have lines coming off these highs. So anyway, those are kind of the numbers I have. You guys see these 23,030 to the downside, and this is a good support level, and 23,700 area, right? And ABCD would come down to 23,383. That's 23,383. All right, quick look at the Dow. Now Dow, in the meantime, we had the triangle. We kind of this false price action to the downside, and then we broke to the upside. Went up to 3/4 of the square, and we came right back into the 50% square, pretty much. 484, 569. And this is the most bullish thing we have going in all the industrials, the big stocks. So if you draw a trend line, it just holding it pretty well, right? We had a nice consolidation. It's looking okay. So obviously, for the Dow, taking out Friday's low in any meaningful way would take out the dashed trend line, and that would break the trend. And now we're below the 50% level, 49, 484. So I would say for the Dow futures, below 49, 484 would be weak, right? That would be the way to read that and trade it accordingly. But if we can hold above that 49,484, I would say, Dow is doing his own thing. It's in a much better position. Yeah, we'll see what happens. We did do 216 from where? From that low to this high, pretty close. So we have some timing at that high. Let's move on to the weekly. Normally I jump back and forth between the weekly and the dailies, but let's just do this. Here's the cash weekly. We ran up and we've been banging up against that resistance for about a month. 3 weeks, we had the 1 week drop, and the week before we were right there, close enough. I think this is amazing. This is great chart work to be able to, have the line in place before price gets there, and price gets there and just stalls out for 3, 4 weeks, right? Good stuff. And this is what's giving us the confidence to, sit there and hold and talk about the shorts and take the shorts when we see it and not worry about this thing getting blown out. Obviously, if we're going to go up, you're going to get blown one time. That's just how it's going to work. But in the meantime, let's see. Let's see. But this is not over by any means. And the cash, if you look, you really have to get too nitty gritty. But if you look at the shape of the highs and shape of the lows, that's looking like some kind of a expanding triangle, which sort of smells of a fourth wave kind of price action. Not the best place to be stuck trying to trade, but this is what we have. Now the question is if this is going to finish up at some point and move higher, right? I think we should go higher before it's all said and done, before the next big cycle hits. But it's just a matter of how much we correct here. After this leg is done, maybe in the next 2 weeks, we'll figure out what that's going to happen. But before all this is said and done, I think I would like to see cash come up into at least to the next eighth of the square. That's a very good setup on the weekly. So 71, between 71 and 7,200 would be a good target if we blow through this. And we might, God knows, who knows how long we're stuck in this range. So let's see. So those are the weeklies. Here's a weekly
Look how it
continuation
just,
chart.
yeah, look how it just wedged up into that corner. That's awesome.
Beautiful, beautiful,
Hmm.
beautiful. What can I say?
Hmm.
This is, I mean, the great thing is, we had it way before it even came and touched it, right?
Sure.
So we had it over here. And I said, I'm going to keep it on till it loses traction. But
Well, for people that are working with the squares and trying these out, and using them, when you see that kind of reaction at one of the, important points, like the 135 on this one, it tells you got the right vibration.
exactly. And it's just a matter of pattern recognition, right? Once you
Hmm.
see it setting up, we saw it setting up. We had the lines, we had the line circles for everything, and it just kind of backed into it, right? And stalled, and we dropped exactly at the right time, coming into 45 weeks.
Yeah.
So look, when you're looking at this kind of a weekly chart, it's hard to be saying like, hey, let's just buy the dips, and because the probabilities are we're going to go lower rather than higher, like you were saying earlier,
Yeah.
Ben.
Yeah. It has a lot of similarities. Like we weren't saying short, gold and short silver, but when you see, those major weekly, monthly squares hitting, it tells you something's going on there, right? There's a significant price and time relationship that you have to pay attention to. And that's the same thing I read off of this chart here, a weekly chart that does that and gets the reaction it does in the market tells you, okay, that's significant.
Absolutely. And and geometry, and obviously looking at the charts, pattern recognition. And there's a secondary level of second order pattern recognition, and that would be the pattern of price against the geometry, right? So here is price against the geometry versus price on its own. And those are really powerful when you can pick them out early on and use it to the advantage. So anyway, the other side of this coin is really that if we, one day when we do take out the 7,007 level basis the weekly, we could really go, right?
It's so great. It's so funny you said that because I was saying the same thing. Don't think we're
Oh,
perma bears because if we flip over to the other side of that, it's huge.
it's gonna fly. So
It, it's
and
it's going to
powerfully.
really rip.
Yeah. And that's
Yeah.
really good trading. So we want to be in on that. In the meantime, long as we're below, we want this to finish up, and this sideways doesn't look like it's finished. But when we get finished, we'll know, that week we'll say, well, that looks like that finished. So far, it's counter trends and, down moves and just kind of rattling around. And by the way, if you look at this closely, let me see if I can put it. That's no big help. This is the inside. Well, you guys can look at it on your chart. It's an inside bar, right? So what the so with inside bars, we take out the low, clearly we can continue. And if we take out the high, obviously we just talked about markets going higher. All right, so you're all set up there. Let's take a quick look at the 30-minute, wow, what a week it was, right? In the beginning, it was all choppy. We were basically between this 69.44, the square, this 70.16. And Thursday on the 12th, we broke here. The fuse line was right in here. I think it was 69.80 or somewhere up here. It was
It
perfect setup,
was. It was
right?
right in there. Yep.
Perfect setup. And we dropped, went sliced through here, sliced through this old support level where this held and the poke held here. The flush on the 11th held and straight down into the 50% level and 68.17, which I've had on the board for a while. And now, we came back and we held in the zone, right? So just like we did in the initial rundown. So look, the price action for next trading day is going to be, we want to watch what happens here. And I think Friday, I told you guys, watch the price action here. If we can above 68.42, can settle above that, okay, fine. Settle above 68.70, great. Then we can go and challenge some of these other levels. But if we get stuck below 68.42, then we can get real weakness. So 68.42, we take out 68.17. We have Friday's low right there. We talked about that getting taken out. What way before that, you can see if for some reason before taking that out, we run up here, 68.70 area, and selling starts to come in, and the pull and the first leg and the leg down can't hold this zone, that's trouble, right? So watch this for like some kind of a pivot area, I guess, one way to look at it. But yeah, so that's my take on the 30-minute, the levels you got to watch. It's really the same zone as Friday because we're closing, 3 points from the level that we talked about. So that's that. Anything you want to add to this, Ben?
There's an ABCD up take you right around that 69.08.
Holy moly. Yeah, well, it'll it'll take me out of my shorts. Let's see. Yeah, I mean that'll take us up to the zone up here, which was the old support,
Mm-hmm.
This is sort of like a net here. So it'll get us up into here. Let's see. If we can do that, that would be the ABC that I talked about, right? We could
Right. That
correct into an
that you
ABCD,
right. And then
you know,
weakness there, you could short it again.
right. Absolutely. And then
Yep.
you want to watch it around 68.70 to see, hey, are we holding? If we
Mm-hmm.
break up to here, come back and hold above 68.70, clearly a downside price action is done. But
Yeah, we're
for
done.
now,
Yeah.
for now.
Yep. Yep. And
And
that's
so,
then it's back in the range thesis is
right.
number one.
And long as it's holding above any of these levels, like 68.70, we're going to go up and test higher.
Mm-hmm.
So why do I say that? 68.70 is one part of the square. The upper side is 69.44. So if we hold this, it's obviously we're going to go up and test the other one. If we
Mm-hmm.
fail here, then we're going to go test the downside, which we got pretty damn close, on the 13th. So that's kind of sums up the situation, I think. Now we have the low from the 5th right there, which held right at the 67.52. We could certainly go test that, but if we take that out, then we have a lot more. Good enough. Here's the 4-hour chart. Remember, we this high came in even on the 4-hour price and time
Yeah.
through Gartley, right? Gartley timing. This cycle came in. A couple of cycles came in there on the 4-hour basis, and we got the big drop. Now, I mean, all this is a little bit history. Now we're still trying to work this out, and I think we already talked about this enough. But just wanted to tell you guys just to put it in perspective about why not to ignore the sideways. Is we have the high, low, and the next swing high and the next swing low, and we're in the middle of all of that. So feeling a little stuffy. And if you're feeling stuffy, that's why. And if we can start to break out of this, it'll be great. So we'll see.
Let's look
Let's
at
go on.
bonds. Bonds are
Yeah,
actually doing
bonds.
something.
So bonds finally starting to get above the 45-degree line and with some force, right? We tried for a couple of days and then and Thursday we moved strongly and then Friday we continued on. So not bad, pretty good. So what do we do now? So we have 16.13 is the level we want to watch. 19.16 is resistance. So we were there before. We did the same run once before, right? We're here, we held, ran up there, came back right to the 16 and a half, 1613 level. And then we got under it. Now we're back above it. So it's possible we go up there. Let's see. It could be some kind of a run for a flush. We could go up and do a false break here. But above here, long as pullbacks hold above the 16 and a half, 1613 level, bonds are in pretty good shape for a little run, let's just say. A
Would an
baby
AB,
run.
where would
Huh?
an ABCD from that May low take us? Like you go from the back into May, like
Mm-hmm. Mm-hmm.
that
A,
low,
B.
yeah, and then pull it back to the
Yeah,
C.
well,
Where
that
would
would
that
put
take
us
us?
too far. No. Let's see. Let's see there.
Yeah. I mean, we've been doing so many ABCDs. I wonder if they're going to be doing another one.
Well, yeah, we definitely could be. Well, that'll get us close to 124,
Hmm.
which would give us a false break against the high back in April,
Mm.
right? That's certainly possible.
Let's
Let's
see
see
how,
if we're in that kind of a mood.
right,
So we'll
right,
see. So what are we doing now? We're watching the pullbacks to hold above the 45 line, which is that 16 and a half, 1613 level that we talked about.
exactly.
All right, moving on to weekly bonds. We've been talking about how this is support. 114 is support. We were sitting around there. And I think I must have mentioned it last week or the week before. So we took out the weekly last week's high and off we go, the races. And we were on support, so everything was okay. Now, if that support goes, that's when we start getting seriously into some selling. But the upside, this 1912 area is serious resistance. And you can see we did a false break here, tapped it there. And we're making, just say higher lows. So it's possible that we go up and tap it. But for a long-term trend, obviously we want to be able to hold above this 119 level. Um, let's see if we do this or not. That's for bonds. For now, we're stuck in that little range between 114 and this 119 and a half level. That's the bonds. Let's move on to crude. Crude, well, we're in the range that we've been talking about for a couple of weeks, 61, 61, 64, 75. Making a little triangle, right? So, like I said, once we can settle above this, see, right now we're settled above 61, 61. So we're kind of primed, right? You want to be ready to take those long signals when they show up. Once we get above 65, 64, 75, 65, then we can actually stop moving and actually maybe get a decent trend. But we're watching. It's been a long time coming, lots of fake out, so we'll be patient. Wait for a clear shot. So you guys know the levels now where things can get a little bit stronger. And we've been holding at the 72 level pretty well. So obviously that's where the support comes in. And we're open. If we really get a run, $94 a barrel is not far-fetched because we've been there before many times. So anyway, that's the upside. If we clear that, then we can go back and test the 22 highs around 130. But for now, we're at 62. So the key here, what I've been looking for is to see if the pullback can hold above this 58, 60. Ideally, holding about 61 would be the way to go. Yep.
On crude, that's the bottom line. Don't sleep on it.
No, 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 don't sleep on crude. Not now. All right, let's move on to gold. Not a whole lot to add. We kind of consolidated last week. 49.29 is the level you want to watch for good support, and 47.50. Of course, major support is at 47, 45.73. 63 to 73 is good support. We'll see what happens here in the consolidation. Obviously, we're lining up for a potential ABCD correction, but we could also be an ABCD up. This 45.73 is really good support, so we'll watch that from now. And I'm gonna do the three metals and do the weeklies just to save time. So that's gold and silver. These are the times to really lean into your weekly charts because dailies get a little bit messy. I don't know how many people are day trading it, but then it just becomes easier. Big support is 71.60, so 72. And if we can, for this run, if we can get above 80, 81, I think silver has another shot at testing 90 or higher. So that's not bad. But now, we're in corrective mode. We talked about the highs in both. So that's that for silver. Copper, the high came in, kind of a false break. We're not quite holding the 120, which is about 589. So we'll dip into the next good level, 565 looks like the level. If it can hold above this, hey, it's we're kind of in a new value area, right? We haven't consolidated here in a while, and we're starting to build up right around, wrap around this 590 level, 589, 590 levels. It's something to take note. You can see we have a half a square right there. It is where we're consolidating. It's big and it looks strong.
It's funny,
And
Barry, because the
uh-huh.
level I was looking at on my daily, weekly, monthly is in a range from 547 to 569,
Mm,
right in
yeah,
that area on all three time frames. The price is in that area, the half
right there.
important half square. So
Right. So I think above 589, I think I'll be comfortable with taking long side setups. And below this, I think we're kind of in a holding pattern with 541 being major support. So watch that. And let's take a look at the weeklies. Starting with gold, not much to add. We're waiting for the corrective phase, the pause to finish. And you guys are counting the levels, this 48.15. It's a good level to watch. Market's in very good shape above that. 48.15 right there. And above that, what I call like crude, for that 61 level, it's kind of in a prime level where it can move on short notice. And above 52, let's say 52.38, we're ready to pick up where we left off. So, but this, with this kind of a run, I think we have to burn a little bit more time consolidating. So let it finish up. The fun part is kind of over. We have to wait till after the break to pick up where we left off. And silver, pretty much the same case. I think long as we're below this 84 level, silver's a little bit on the soft side. And long as we're above 66, it's major support. So it's a good holding area between 60 above 66. To get below that, then we'll get a lot more corrective action going on before we flip back around. So for now, we're looking at the 65, 66 area to be good support, and this 84 level for resistance. And if we can get above that, maybe take another shot at 100 or the old highs. That's that. Let's look at the copper. Copper, that poke that you guys saw on the daily chart, will ended up becoming a sort of a big deal. We were up 108 degrees, 288 degrees on the weekly chart. So on the weekly chart, that's a fairly big deal. And longs we're holding about 535. Markets in good shape, meaning overall positive. Trend is intact. And above 593, we're in a very strong position to take off again. And I think with that kind of run, we have to wait till it kind of burns out some time. Again, the metals are kind of resting, so let it finish up and get going properly afterwards. Let's take a quick look at Bitcoin. So last week, and the week before. So the whole Bitcoin thing, you guys can catch the Bitcoin episode. We both cover it every week. I mean, the whole thing was we found resistance here, the low, high, low. This high was resistance. Support didn't hold. So that's it. Waterfall down. And now this 56,886 is good support. And obviously Bitcoin beat Bitcoin. We could get down to that 52 level that Ben had on the chart. So somewhere around 50,000 something, right? 50 to 55 looks like support. Now that's if we slip. So the pivot level for next week is going to be 68,580. If we can hold above that, manage to hold above that, I think we can take another shot up to there's some resistance. We have an ABCD in here, so that could be one of the things it could do. Now, if it slips below the 68,580, I think barring this line doesn't hold and give it a little bit more life, we're probably going to go check the 50 to 55 level we talked about. It's 56,886 is the next big level. So around that 52, 50 to 55. I think Ben also had a lot of good support last week and the week before when we looked at it. So that's what I'm looking at. If we can hold this, maintain this, but there's some good trading range here. Guys are trading this, and above that, we have to be a little bit careful until we set up set up properly. But now this looks like a third. If that's the case, that kind of price action always follows some kind of a triangulation. So you could get some kind of a consolidation here for now. All right, moving on to the dollar. Dollar pullback. We were looking to see if pullbacks can hold above the 50% level, which it did last week. Now, if we can continue to do that this week and take out the high from last week, I think we're back on track. Now, if we take out last week's low, we lose the 50%, then I have to say, the dollar's in a bit of trouble. We might have a soft dollar for a while. So it's a kind of a critical time. I know you have some cycles coming in next week, Ben. So putting it all together, it could be a critical week for the dollar. So we got to watch this carefully. Playing around this line is okay, but we don't want to get stuck here. And if we lose this pattern here, no, we could do an ABCD up. That's all. Anything above the 50% level is a 96.60 is great. It was great fun. We get below this 96.60, then dollar could be in a little bit of trouble. So let's watch that. So next week's going to be important for that. Take a quick look at the euro. So euro came up to the resistance that we talked about last week. We held at the support, old highs, structural support. So now either we're going to consolidate here, right? I just cannot imagine, you're going, but hey, weird things have happened. We also have a ABCD possibly setting up, but everything depends on this level. Below 1940, I think, I'm looking at the short side. And if we lose this 1793 level, that would set us up to the downside, especially with this ABCD going down. And the dollar would set up perfectly also. So it's a kind of a critical week for the euro as well. So let's take a look at the weeklies. Anything you want to add to the currencies, Ben?
I think what you said about the dollar is important. Can we make a higher low and hold that support level?
Yeah, it's critical because remember when we flushed down, we dropped in here, we came right into that 95.50 big time support, right? It's a big line, big level for a long time, and we recovered the 144. Now the question is if we can hold above that. So
Yeah,
far, so good. That 96.60 is going to be critical if we can hold that or not, right?
100%. That's the most important level for the dollar.
So let's continue to watch that. If we can maintain above it, that's some kind of a positive light, positive hint. And obviously we can punch through this zone to the upside again. Our dollar's back on track. But getting stuck below this means, probably some kind of a controlled holding pattern, right? In here. So we'll see how that goes. For now, we're kind of waiting to see what happens. We want to make sure we're holding, if we can hold about 96.60 or not, right? That's the deal for next week if we're so close to it. And the weekly, we did this ABCD, and we did the little poke. Sure will look like a false break. Now, we're back up again. So currencies being currencies, this would be the perfect weekly bar to watch. Once we take out this low of this bar before we take out the high, that would give us a really nice setup. Otherwise, we're probably going to consolidate in here a little bit longer. So, and you can see the triangle that we drew in. Now we broke higher. Now we're holding higher. So everything looks like euro is a little bit stronger, dollar's a little bit weaker. The question is how much, right? Are we going to go back up into, can the euro go up and touch 23.60? Dollar, being much weaker. Next week we'll see. If we leave these levels, then it's going to be a pivot. So that's going to be that's the key to watch. That's what I'll be watching. So we'll see how that sets up. Hang Seng, we're above 26,230. We're okay. Below that, I think we're going to have some issues. Above that, we're okay. So far, we've been above it. So maybe We'll continue to do that in the coming days, at least for the next week. 298 is still the base level for natural gas. Great place to sell your puts. Let's see what happens. We've had a couple of sort of false starts, and we're back again, and let's see what happens next. Looks like bottoming process being so long, once this gets going, it could be a big mover. So we'll see. It's going to take some time. Well, that's all I got, Ben. Let me put it back to you, and we'll cover. I know you got a lot of commodities to cover:
The
cocoa,
grains.
cotton, grains, lots of things.
Yep.
Let me put it back to you. And you guys, if you guys like our work, any part of our work, anything at all, even one segment, hit the likes and subscribe and share the videos when you guys get a chance. And there you go. Look at that. You're all set with the ABCD there, Ben.
I've got it drawn in. Now the market's just got to follow it, right?
Yep, yep.
I
You're
mean, a
ready for a
lot.
second course.
Yeah, a lot like, a lot like you were saying in the ES, the things are in place and now we have to see, do we get the second course, right? We came down, we made a lower high. It's essentially a double top, but it is a lower high. We came right down to 50% of the square, rallied back up for another lower high, and this, I think, would be the worst one of the worst case scenarios for the Bears if this in fact plays out, right? That it just does an
Mhm.
ABCD. Best case scenario would be it's a bigger three and a stronger move. The thing I keep saying, in the daily post, Barry and I both post every day on the markets. I do NQ and ES, and Barry does, the fuse lines and ES commentary. So if you don't subscribe, you're missing those daily reports. So definitely take a look at it. The one thing I keep saying is we got a reaction off of this high to high 90, low to high 48, which is in that Gann death zone. We got a good reaction off of that. So it
Yeah.
that it adds more significance to that lower high. And let's watch and see this week. Obviously, you could see Friday's bar, if we're using the same criteria as the ES. Friday's bar is on the 5/8 and the 3/4. Essentially, the high is around 25,000. The low is around this 5/8 line, which is around 24, 24,626. So those are going to be kind of your markers for early next week. Do we take out the high? Do we take out the low? Whichever way we do it, it'll give you a clue as to, what the short-term push is going to be. But let's look at some of the other charts, because Barry did review the weekly. I mean the daily. I want to show you the daily calendar day quickly to show you why that Friday high is important. Look at where it sits, Barry.
Wow. Yep.
Right on that 450. And
Hmm.
so that's a key number, right? And you can see why. Here it was support, here it was support, here it was support, and now we're under it again. We shot under it for a couple days and then it pushed right back above, but now we're back under again. So this is worth watching, why that high of Friday is so important. Can we get above that? So minimally for the bulls, we want to be crisscrossing because then that means the battle's happening. But if we get stuck under, the pressure could come on pretty dramatically to the downside. That's why I wanted to quickly show that calendar day. Here's the weekly. The weekly shows you why that 26,000 area is super important, right? We crisscrossed it here, crisscrossed it a little bit there. Last week we had a full bar under. If we do rally up, we want to watch this level to see if we get stuck under there. That could be the accelerant that pushes this thing pretty quickly
Hmm.
lower. So 26,000 on the upside is key. On the downside, it would be taking out this past week's low, which was around 24,578. That would be the low we want to watch. And then, of course, this, 24,000 area where these lows have come in, right? We had the high here, the low here, the low here. the low here. So this area is going to have a lot of support. But we watch and see. Do we get the push down first? And if so, eventually these things give way. Let's take a last look at the monthly. Here's the monthly. Monthly shows so far we have it's if you look at back to the big bar, we've had what, one, two, three. This is be the fourth inside month. One, two, three, a third inside month. Um, but we've taken out the lows of the previous 2 months already. So 24,000 monthly basis is going to be key. That's
Yeah.
180 up from the .com lows. So it's a pretty significant spot. If we do get stuck under that, that's going to be a strong marker that bigger picture this trend
Yep.
is
Yep.
over, or there's going to be a significant correction.
Hmm.
So we got daily, weekly, monthly levels. Anything you want to add looking at these, Barry?
No, I think we're good. Theme is still in place. So let's
Hmm.
play it out, play it through.
Yeah. All right, let's take a look. Let's go to Bitcoin. Well, Barry ran through it, but I'll show you the levels that I have and the key levels to watch. Clearly, as long as we're below this 73 and above 61, we're going to be in this battle in this chop. You can see we're kind of fighting in this quarter square here. On the downside, 61,972 is the key number. On the upside, 73,561. So no real edge here yet, right? It's battling. It's trying to figure out which way it wants to go. We did do basically 90 high to low,
Right, right.
which is, you know,
Hmm.
telling for this low. Obviously, as long as we could stay above this level, that we could say, okay, that cycle's completed. Now, what are we going to do here? Is it a new sort of impulse, or is it just sort of a corrective thing where we burn off time and then head down again? So we'll have to watch that. Let's look at the weekly. Weekly is a little bit of a more troubling picture for the bulls, right? This is important support area, this sort of 70 to 74, and we're trading below it. We're poking into it, but trading
The
below it.
resistance area now, right?
Yeah,
So,
I mean, this is where you're knocking your head on the ceiling, right? This is how bearish trends are formed when you get stuck below, a previous area of support.
right.
Um, until we get above this 76.46, as you were talking about, yeah, 52 is the number. It's
Hmm.
52 is where the pressure would be too. So we really need to get on top and sit on top of this. Fortunately, we're crisscrossing it right now. Like price has dipped into it. It's not getting totally knocked on the head. At least it can peak above the roof, so to speak. But we got to get on top of the roof for this to be an all clear.
Hmm.
Let's take a look at the monthly. Here's your monthly.
Oh
Let's get,
boy.
yeah, this is not very pretty. 74, right? 74,
Hmm.
532. We need to get above that. A monthly close above that would be really helpful for the bulls. Otherwise, if we close down in here at the end of February, we're in danger of printing a full bar below this 74, which again opens up the half square at 56. So bottom line, if you want to sum it up, Bitcoin's got a lot of work to do. Weekly, daily, monthly, it's got work to do to sort of turn this negative tide that's prevalent right now. Anything else you want to add on the longer time frames?
Yeah, we're good. We're good. Let's see what happens here. At
Yeah,
52 is still 50 level still looks pretty good. So,
yeah. It's got work to do. Let's put it that way.
hmm.
All right, let's talk about the commodities. We're going to go over in depth wheat, corn, soybeans. We'll look at daily, weekly, monthly there. The metals Barry covered very well. No question they're in a corrective phase. The only outstanding question we have is, was that the top that we're seeing or a top? And that'll play out how the corrections, how deep the corrections go, how long they go. We'll be able to weigh the odds in terms of being able to talk about that. The softs were really interesting today. We're not going to review any charts, but I wanted them to be on your radar for a reason. They all took even deeper dives down. Sugar took a deep dive down. Cocoa took a deeper dive down. Coffee did. And they're setting up what looks to be, it's too early to tell, but it's starting to give me the hint and the feeling when I was looking at the charts that this is that, that last sharp move down or sharp move up in the case of when they make highs prior to a reversal in trend. So what's the thing to do there? You want to watch sugar, you want to watch cocoa, you want to watch coffee in the coming weeks. Does it stop going down? Does it start going sideways? Does it start, actually, making on shorter time frames higher highs and higher lows? And that can be the beginnings of how we find that corner. We'll look for the squares, we'll look for, other things that signify that other move. In this case, the downward move has terminated, and now they're changing course and moving higher. Cotton, which has been going sideways for forever. I was telling Barry, we had the 10th, we're working on in February of this year, we're working on the 10th monthly inside bar in a row. So that is a definition of a sideways trend.
Mhm.
Although it did ramp up this week for some reason, like it pushed down, made a low, and then ramped up. So
Mhm.
cotton again is all, as it has been because it's been going sideways, is on the radar. I think keep an eye on all the softs. You don't have to look at a 15-minute chart or a 5-minute chart or anything like that. Just look at it every day. Look at the price action every day and see for signs of a change. Something's different. Something's changing because they did in a coordinated fashion, it looks like got dumped. And that usually is a sign where, we're getting close to the turn. So that being said, and we're also going to cover crude oil. So let's go to the grains first. Okay, so here's the daily on wheat, and you could look at this and you could say, "Oh my God, this is boring. Why are you having us look at this? This is sideways." Well, again, remember we're looking for those clues and we're looking for signal amongst the noise. If you look at it without looking closely, this does look terribly sideways, right? I even drew in this sort of top channel line you can see. But within this price action, there is some signal. Here we have a false break, right? We came down. We've been making a series of lower lows, low, high, low, high, lower low, lower high, lower low, lower high, lower low, false break, right? It didn't extend it. We actually pushed up higher than the previous little thing. So, okay, that's the first change. We made a false break low. We made a high. Pulled back, we made a higher low. And now we're pushing up and we're going to be challenging that recent high. I put in the three-quarter square here at 570. That area is kind of key. Watch this coming week.
Mhm.
Can we push up? Can we get above that? Because then that would cement in place the false break low, a high, a higher low, and then a higher high on a daily basis. So wheat is the furthest behind of the three. You'll see the other two are further along and why it looks like they're going to drag wheat kicking and screaming along with them. Let's take a look at the weekly. Here's your weekly. Nice little weekly up bar there. See that?
Yep. Yep.
Amongst all that sideways that I showed you, look at this trend of higher weekly bars. And we got a weekly close over 536. First time that's happened in a long time. So 536 next week is key. If that it can be the low and we get a full weekly bar above that with a higher high, we've cleared it. We've cleared 536. We've cleared the half square. Next up would be 571. Taking out this high here would be important as well, and that is around 563. Again, this one's the furthest behind, but it's showing signs. And that's what we want to see to catch these commodities early. Here's your monthly. To note on the monthly here, we've made a higher high this month. Last month we had a down bar. right? We just took out the previous level. That was your false break, and now we've reversed that. So we have a monthly reversal in place so far, with a couple weeks left. 549 monthly is key. That's this 7/8 line.
Hmm.
And then
Hmm.
after that, it's the full square at 595. So that's the story on wheat. Anything you want to add, Barry? Anything that stands out to you?
We've covered this a couple times, ever since you started picking back up on the grains because they're starting to look right, let's just
Hmm.
say. Well, I think any of these dips are places to buy.
Yep.
Yeah, it's sideways. Is sometimes when it gets away, it's very difficult to catch. It's better to add a little bit at a time as you go.
Get a toe in the water, so to speak.
Hmm. Hmm.
All right, let's take a look at corn. This one's a little further along, and you'll see why. So we made a low here on a full square, had a nice push higher, had a pullback. There's one of those scary bars that they like to shake the trees, right? But you can see it came right back into, you know, this support level, and now we're edging back up. The key number here, we closed above 429, which is the 3/8 line. And the next key level is 446, which is 50% of the square. So we push up, sit on top of that, then we're building, right? We made a low, a high, we'll have pulled back, made a higher low, and then a higher high that can sit on top of the previous highs. So that's what we want to see corn do. Let's look at the weekly. Here's your weekly on corn. You can get a view of why we're becoming interested here. Had to push up, ABCD down into a higher low, went up above, sat on top of the full square at 412, pushed up for a higher high, pulled back, another higher low, and now we're looking to go. We're all ever since that raid, it looks like here, that bear raid, we've been inside
Yeah.
and it's sort of
Hmm.
building, but look at what it's doing. It's sitting on top of the full
Exactly.
square.
Exactly.
And structurally, it's a sloppy trend, but it's right in near where the old highs were
Hmm.
on the previous swing. So that's a bullish trend. And this is weekly too. That's your weekly on corn. Let's quickly take a look at the monthly. Key number here on the monthly is we want to get above 463. Right? We get above 463, we've made a higher high on a monthly basis, and we're sitting on top of that full square, and then we open up, much higher prices in corn. Anything you want to add to the bullish looking pattern here on corn?
Well, my take is the same as wheat. I think we have to take, little shots at this as we go. I feel like the lows are in. And the overall, grains, coffee, cacao, everything, we should really be watching these now. I think in the coming months, these lows look good. They're holding. I mean, look at this.
Yeah. It's the base building before the big move. That's what it
Hmm.
looks like.
Yeah,
And
yeah.
and we're just playing the odds, and you base with using the squares and the support levels, you can see where your risk reward makes sense, and
Hmm.
that's how you
You want to take
that's
the
how you
shots.
catch
Yep,
the big moves, right? You have
yep.
to be in. You have to be in. All right, let's take a look at the one that's furthest along. It's beans. And I think this is sort of a preview of what you're going to see in the others. If you're looking at wheat was doing this thing, wheat's still doing this thing, sort of this sideways. Corn has started the first move up, right? Where we've gone up, made a high, made a higher low. Now we got a higher high. And look at how this thing just starts stair stepping higher. Remember, I was talking about, well, corn captured that full square level. Here's what happens when you can capture the full square level, right?
Exactly. Yep.
Beans did it, and now we push up, and now it's capturing the next level, which is the half square here. So for beans, watch 1125 this week. We sit on top of that. The previous highs around 1170, and then the full square at 1200. And this is how the stair stepping goes. And why you get involved, because we've been talking about beans for months and months and months, but why you get involved when you see the evidence of, false break low, higher highs. Even though if you looked at this trend here without looking to the right, you'd say, well, that's sideways. Yeah, but the clues are there. And then it starts unfolding. And that's what beans is doing. Let's quick take a look at the monthly. Though this is a weekly. Here's a good example of, how you after sideways what you want to see, right? You're going sideways, sideways, we break up, we come back in, test it. Once you hold this half square, it becomes the launching pad, right? You have the half square there and you have the structural support. I mean, this is classic, right? Classic technical analysis. So we want to watch and see if we can take out that, 10, I think it's 1170 is that? Yeah, 1170 is the price there. That's the next one we want to look at. And then let's get a quick look at the monthly.
They're looking good,
Shows
huh? The beans are looking good.
they really are. And everyone was talking about how, they're in such big supply. They're having farmers are letting their crops rot because they're so terrible. All that was during this consolidation when we were making the higher lows and higher highs. And then it starts going. So beans look good. They do look good. Anything you want to add into beans?
Just more beans.
Eat more
No,
beans.
it's good. Yeah, add more beans. We're good.
Let's take a quick look at crude. Barry covered it. I want to show you again why a boring sideways pattern still is worth looking at. So here's your false break, right? Made double bottom here, false break here, and then here we go. Test the full square, can't make it. Now look at what we're doing. We're sitting on top of a full square. Again, this is how you stair step up, right? So 62.48 based on this daily. As long as we can stay above that, we can push higher, get to 68 and then 73. And so, yes, bigger picture, it's sideways, but the clues are there. False break, higher low, higher high, higher high.
Hmm.
It's starting to do what a bull market does. Here's your weekly. I want to give you the weekly to show you uh, the sideways for the last 2 months is here, right? Two inside bars. But what are we doing? We're sort of coiling up right under this full square of 67. If we get stuck under this, yes, we could go sideways. We could even go down. No question about that. But we want to watch and see because as soon as we get above and sit on top, that's when this thing's really going to fly. Because remember, here it was support, here it was support, here it was support, here it was resistance. It is a really important spot for crude. So let's watch that. Lastly, we'll take a look at our favorite monthly circle chart that we showed. So we've escaped the downward curve of the circle, and now we got to work on getting up above this full square at 71. That's going to be our next test. 64 is 7/8, and you can see we're battling with that right now. If we sit on top of 64, then it's going to be 71 on a monthly basis. But you can sort of see, and you've been talking about it in crude, how the things are starting to happen, right? The higher lows and higher highs are starting to show. It's capturing levels. It's stopped going down. And those are the things where in commodities you can catch that corner, get involved, and be in it when it makes those crazy parabolic moves that you just can't chase. It's impossible to chase profitably anyway. It's impossible to chase those moves.
It's harder, making it
Yeah,
harder.
yeah. So I mean that's it for the commodities. Things are happening. I got really excited when I was reviewing the softs because of the price action there. There's nothing to do yet other than watch and watch the price action for clues. But yeah, the predictions about 2026 of not being boring in the markets are certainly there. So
Mhm.
everybody enjoy your long holiday weekend, and we'll talk to you next week. Great job, Barry, and we'll see you next week.
Thanks, Ben. Good job. You guys have a great week, and we'll catch you next weekend. Take care.
Take care.
Bye-bye. Bye-bye.
Bye.